Before we continue, please click the like button, subscribe, and enable post alerts if you enjoy this kind of information. This will ensure that you stay informed about all the latest developments with Tesla. The allure of large-cap equities, such as Tesla, is evident in the realm of investment. This electric vehicle manufacturer has not only upended the auto business, but it has also gained widespread recognition. Although public investors are drawn to Tesla's creative approach and leadership role in the stock market, institutional investors have long held sway over the market. They anticipate that Tesla will continue to develop in the quickly evolving electric vehicle (EV) sector. Within the conventional automotive business, Tesla's electric vehicles and developments in autonomous driving technology are viewed as disruptive factors. Investors think that people's perspectives on energy and transportation could be drastically altered by these advances. Similar to this, as Tesla increases its production capacity, penetrates new markets, and broadens its product line, retail investors see substantial growth potential in the company. An additional source of optimism for investors is the projected increase in EV adoption worldwide. Globally, Tesla has built a strong and known brand. Investors see Tesla's track record for dependability, efficiency, and sustainability as a competitive advantage that helps the company stand out in the marketplace. Retail investors want to see anything like this. Tesla has seen remarkable financial progress in recent years, as evidenced by its steady revenue growth and profitability. More is yet to come. For instance, solar products, Powerwall and PowerPack research, and Tesla's entrance into electric vehicle and energy storage solutions have all been viewed as promising endeavors. The business is steadily rising to the top of the renewable energy industry. These financials provide convincing evidence that Tesla is a reliable and profitable investment for average investors. Tesla offers tremendous benefits to retail investors for a number of reasons. First of all, a larger pool of possible investors is made possible by the ease with which regular investors can purchase Tesla stock. Because Tesla shares may be purchased in fractional amounts, unlike certain expensive equities, it is more affordable for people on a tighter budget to invest in this market leader. Furthermore, Tesla has enormous growth potential for the foreseeable future and is leading the EV revolution. As a result, retail investors frequently benefit from a longer investing horizon. Long-term investors who have the financial means to do so may profit from Tesla's ongoing growth and innovation. With a market share of over 23% worldwide, Tesla is the industry leader in electric vehicle technology. Because it sources raw materials directly from suppliers and makes its own batteries in its gigafactories, it has an advantage in the battery production industry. Additionally, Tesla has a network of superchargers of its own that allow for quick and easy charging of its cars. Tesla is a software and sustainable energy firm, in addition to an electric vehicle manufacturer. In the future, it intends to introduce additional goods and services, such as the Neuralink brain-computer interface, the Model 2 internet service, the Cybertruck, the Semi, and the Roadster. These are some of the reasons why experts like Ross Gerber believe that investing in Tesla is a fantastic way for investors to be a part of the transportation and energy industries of the future. It is evident that Tesla is a business that continuously innovates and enhances its goods and services. Its dominance of the market and ability to generate value for its shareholders are things we think it will keep doing. Investing in Tesla, like any investment, can undoubtedly be emotionally taxing during periods of market volatility. It might potentially get worse. Retail investors, on the other hand, who manage their own portfolios might grow more resilient and have a deeper comprehension of the markets and the assets they possess. Better decisions may result from this in volatile markets. How do you feel? Is Tesla a wise investment? Please share your thoughts with us in the space provided, and don't forget to value Tesla. Go ahead and click on the next video that appears on your screen to learn more about Tesla's recent activities. I'll see you over there. When we discuss how some manufacturers, like Rivian, are being compared to Tesla, people get enthusiastic about seeing Rivian vehicles on the road. But Tesla delivered 435,000 cars, whereas Rivian only delivered 15,000. Compared to Tesla's 1.8 million vehicles this year, Rivian is likely to release 52,000. What position does Tesla hold? What should you tell the doubters? Globally, none compare to Tesla's size and reach. The thesis highlighted the competition from Detroit GM and Ford as one of the main concerns. However, Tesla has now won from the UAW fiasco. While BYD, NIO, and other companies have engaged in pricing wars and price reductions in China, Tesla has increased its market share. Despite a volatile market, I believe they are in a tremendous position of strength heading into 2024. This time around, delivery estimates and delivery numbers, those crucial 3 digits, are what put Tesla back in the spotlight. While analysts have been offering their opinions, today we will examine the situation from the perspective of Dan, one of Tesla's biggest supporters. So grab a drink and let's explore the most recent buzz around Tesla. We're going to unravel the true meaning behind those Q3 delivery figures. In the third quarter of this year, Tesla delivered 435,059 cars, which was less than Wall Street had anticipated. It decreased by over 7% from the prior quarter. The less than anticipated outcomes followed a record-breaking second quarter in which Tesla built and delivered 466,000 automobiles. Regarding these delivery statistics, numerous analysts have shared their thoughts. Analyst Dan Ives of Wedbush Securities recently talked about these Q3 delivery figures. The somewhat lower than expected quarterly numbers, in his opinion, shouldn't worry Tesla or its investors too much. You might wonder, though, why he made this statement and why investors should still have hope for the Tesla tale. That's the delicious tidbit we'll cover in today's film, though. Therefore, if you believe that Tesla's quest to unthinkable success is over, think again. This could only be the start of it. Front and center is Tesla. Here on Schwab Network, Jenny Horn, our markets correspondent, is currently examining Tesla shares following the announcement of the company's quarterly delivery figures. What are your thoughts? It's a bit of a mixed picture because we did have deliveries for the third quarter totaling over 435,000. They delivered over 435,000 vehicles, as they claimed to have built over 430,000. Volumes decreased sequentially as a result of some of the scheduled downtimes they've experienced for manufacturing improvements. The volume objective for 2023 has not changed from what the street had anticipated and is currently estimated to be about 1.8 million automobiles. As I mentioned before, they did record just over 435,000 deliveries. This was an important figure for the street. Let's face it, the Detroit Big Three have really been destroyed by what's occurring in Detroit with the UAW. As far as 2024 is concerned, I think this year will be crucial. As far as I can tell, one of Tesla's advantages over Rivian in the way they created the company is that it will never have a union. The unfortunate thing about this UAW cage match with the Detroit Big Three at the moment is that Tesla and the foreign automakers who stand to gain are the winners. Wall Street projected 473,000 units for Tesla's Q3 in September, but following that, analysts' expectation fell to 461,000 units, a 2.5% decline. Pierre Ferragu, an analyst at New Street Research, predicted 438,000 units, which was a deviation from the consensus. He attributed this to plant shutdowns to drive material miss and the manufacturing of a new Model 3 in China and Europe, which would replace earlier sedan models. Ferragu's prediction of 438,000 units represented a 27% increase from the 344,000 units produced in the third quarter of 2022, but it represented a 6% decline from Q2's 466,000 units. Welcome back to Tesla Tomorrow, everyone. Strong supporter of Tesla, Dan Ives recently increased his price objective for the business by $50 to $350, saying that it has proven it can profit from important items like its network of superchargers and self-driving technology. Ives was reacting to the news of Tesla's second quarter earnings, which caused its stock price to drop by 4% the next day in pre-market trading. The Tesla investor said that the company's profits will probably continue to rise once it is able to expand the use of fully autonomous driving technology. The investor cited Tesla's innovative agreement to extend its supercharging network to other EV companies as a money making opportunity. In light of indications that conventional automakers are finding it difficult to stay up with Tesla's price reductions, he also hailed Tesla's pricing war as a smash hit in China, Europe, and the US.